Good morning and welcome back to Margin. This morning we're going to talk about federal tax rates. This is part 2 of a 2-part series, so let's jump right into it. So the effective tax rate that you may have heard, that terminology floating around, is basically the average. So when you're looking at the average tax rate, you're basically adding up each of your levels of taxation at each level and dividing it by your income. That gives you the effective tax rate. So the marginal rate would be the percentage applied to each and every dollar above and beyond the actual bracket that you're extending beyond. So basically, if you are in the 10% going into the 12%, if you have a certain amount of income in that 12% bracket, that rate, then it will be applied to each dollar that's above and beyond that threshold. So for example, when you are looking at a household income of $65,000, this is an example I've used in prior episodes, but applied here today. If you have an income of $65,000 as your household income, assuming that you are married filing jointly. So when you are looking at 2020, if you had that household income, you would pay $1,975 in taxes for the first $19,750. Now with that, you are paying that 10% tax rate. Now, moving over the threshold of the 12% tax rate, anything above and beyond that, leading up to the $65,000, would then be taxed at 12%. So that additional amount that you would pay in tax at that 12% would be $5,430 for a total amount of tax in that bracket of $45,250. So that would equal your total household income of $65,000. So keep in mind that you may have tax credits or deductions that will reduce your taxable amount owed. And so keep that in mind, that although that you are calculating your tax rate from a federal standpoint, you're going to have other components that are factored into that as well. The next component to consider that will be factored into that is your state income tax. Now, there are 7 states that do not have a state income tax, but for the rest of the states, there's a state income tax that you also have to factor in when it comes to your income tax. So statefoundation.org put out a very helpful map showing all states in the United States of America and how they rate in regards to income tax. And so when I was looking at this resource, it shows you the highest taxed state from an income tax standpoint, which is California at 13.3%, all the way to those that have no state income tax, like Washington, Nevada, Wyoming, Alaska, also South Dakota, Texas, and Florida. And so when you're looking at that representation by the statefoundation.org, it was a very helpful resource that may be helpful for you if you are considering relocating. Now, keep in mind that if you have an online business, or if you have a business where you're providing services in another state, you have to consider what that would look like for your income tax if you need to file in those states specifically. So there are also 2 other states, New Hampshire and Tennessee, who also have no state income tax except for on interest and dividend income. And so you may want to consider that in regards to a state if you are moving to, if you have a lot of dividend or interest income. Now, this map also breaks down whether you have states that have a flat income tax, whereas that income tax is applied to everyone no matter the income, or whether it's tiered based on income levels, much like the federal government. And so when you're looking at each state, it's also helpful to look at whether the state that you're moving to or the state that you're in has a tiered system or if it's a flat tax rate. So my call to action today really comes down to you understanding how you are being taxed from a federal standpoint, as well as understanding how your state income tax factors into that. And so I would encourage you to sit down and look at your tax rate based on your income level, based on your filing status, and look at that from a standpoint of how much you're expected to pay out in this next year so that you can be proactive rather than reactive, and factoring in those components that you do have an idea of. You may not have clarity yet on those deductions or other aspects that may reduce your taxable income, but nonetheless, it's important to look at the federal as well as the state income tax rates and how they apply to you. If this information is helpful to you, please do like, subscribe, and hit the notification bell so you're reminded to come back on a daily basis and improve in managing your personal finances. Thank you for your time. Enjoy your day, and we'll see you back here tomorrow.